You this evening. Co-working space management behemoth WeWork filed for bankruptcy yesterday, capping a remarkable collapse. 4 years ago, it was one of the most valued startups in the US, worth $47 million. Now, amidst these developments, WeWork India CEO Karan Virwani has said that the India operations will not be impacted. And to elaborate further, joining me now is Karan himself. Also joining us is my colleague Arundhati. Karan, welcome to Startup Street. While you've clarified that WeWork India operates independently of WeWork Global and you're not part of the strategic reorganization process, but Karan, won't there be some repercussions as far as brand image is concerned?
I think that, of course, as we carry the brand, there are issues that we need to resolve and just give comfort to certain members, which is what we've been trying to do through the press and also through one-on-one conversations. However, I think WeWork India has established itself over the last 6 years in the Indian market as the leading player within the flexible workspace segment. We actually created this segment, when we started here 6 years ago with the scale that we opened and the footprint that we have right now. So our members believe in us. In fact, if you look at all of the responses that we've got, even on online articles, our members have been very supportive of us. We continue to see new deals and new sales sign up on a daily basis. Our value prop is actually becoming stronger and has only gotten stronger since COVID. So from a business perspective and a front end perspective, we actually see no impact from a few weeks ago, last month, or even the last few years. We've only seen an upward trajectory, and our numbers speak for themselves. So yeah, so there is very minimal impact right now.
Absolutely, Karan. But you continue to hold the rights to use the brand name as part of the operating agreement, right? So with the possibility of WeWork India's image maybe taking a hit because of what's happened globally, would you maybe look at a change of name?
I wouldn't, purely because of the fact I think that WeWork still continues to be synonymous with the flex industry. They're the category defining brand, and we have built that at a global level. If you look at what's happening even in the US or around the world, WeWork isn't going into what is essentially like a Lehman's Brother event, which is Chapter 7, right? They're filing a Chapter 11 bankruptcy, which allows for companies to restructure their balance sheet. Now, our competitor like IWG has done this and did this during COVID. Retailers have done this in the past. Macy's, Zara, American Airlines, companies that are continue to operate and are strong brands, category defining brands even today, continue to operate after coming out of a bankruptcy or a Chapter 11 process. So we are long-term players. We believe in the space and the brand long-term. There is a little bit of pain right now, but we know that the management team has a very strong plan to get out of this. And if you look at the filing, you look at the fundamentals of the business, and you look at the earnings that the business has, WeWork Global is still generating close to 3.5 billion in revenue on a yearly basis. We still continue to have over 500,000 members across the world, and over 500, 600 locations. So the brand continues to stay strong.
Okay, so there's no change of name on the cards as of now. Karan, the Embassy Group holds 73% stake in WeWork India, while WeWork Global holds only 27%. Tell us, what does this minority stake mean? Are there shared resources or dependencies between the two entities? Also, is there an agreement to buy out the stake?
So WeWork in 2020 put in about 100 million into WeWork India. Until that time, it was 100% funded by Embassy. So the stake is in relation to that investment that came in at that point in time. We have a separate operating agreement, which is what we've been using from the start of 2017. That gives us the right to use the brand name and the essentially all of the IP that comes with it, and all of the playbook, and the design and all of that comes with that. So they're two separate agreements. Right now, there's no discussions around, them moving off the cap table or anything like that. And we are just sort of working with them as partners to try to help them get through this time.
All right, so working with them as partners to help them get through these times, and there's no decision to get them off the cap table at this point. But, Karan, WeWork India has been profitable since 2021. So take us through your numbers. What are your targets for the future? And what makes you so bullish about the space in India?
So India, I mean, we all know the India story.
Right.
Great amount of business activity that exists will happen in the next 5 to 10 years. Startup ecosystem and the MSME ecosystem in India is booming. MNCs continue to hire in huge volumes in India even today. And India is one of the youngest demographics in the world who want a very different environment for their workplace. And also, India has chosen to come back to the office as the primary, way of working. But now that way of working is obviously more hybrid than it was in the past, and we intend to benefit from that. If you look at our numbers, just from April to September, we've done almost 832 crores in top line. We're operating at close to about 20% EBITDA margins. So we've done around 160 odd crores of EBITDA in the last 6 months. And from an India standpoint, actually, that will be closer to 530 odd crores of EBITDA in just the last 6 months. We see a 40% growth in revenue just quarter over quarter, and a 22% growth in EBITDA quarter over quarter. So
Okay.
we are actually in a very good place.
Yeah.
And all of our business lines are firing at this point in time, right?
Okay.
So EBITDA has increased almost 100% since last year.
All right, so those are some great numbers. But Karan, I just want to go back to the bankruptcy announcement. In the process of bankruptcy of the parent, a change of board of the subsidiary is inevitable. That is what experts say, that as long as such a new board wishes to continue the substantial part of the existing business model, it should be business as usual for WeWork India. Your comments on that?
Mm-hmm. So we and the shareholding that that WeWork holds in our company is multiple levels below the restructuring that's happening today. So from what we understand, there's absolutely no impact on anything to do with our board. There will be some change in the board at WeWork global level, but again, I can't comment on that. That will be dependent on what happens through the bankruptcy process. What I do know is, primary shareholder there is SoftBank, and the primary debt holder continues to be SoftBank. So we see that there shouldn't be any major change in the way that the company is operating.
All right. And Karan, if you could quickly tell us, I'm just going back to your business in India. Currently, your member base includes about 80% enterprises and about 20% of SMB entrepreneurs and startups. So going forward, do you see this mix changing?
No, I think the mix reflects just how businesses are growing in India themselves, right? I think the top employers continue to be the largest in size, and they also be the largest in the way that they take space. The startup ecosystem and the mid-market is definitely growing, but in terms of volumes, they will always, be lower than these large enterprises. And our member base reflects pretty much what is happening across the leasing space in the country. So we do see that India will continue to have very strong enterprise demand, and it's actually a fundamental reason why WeWork India is so different from WeWork around the world, and why we've been able to be so profitable.
All right. Karan, we've completely run out of time, but many thanks for joining us on Startup Street today, and wishing you all the best with all your growth plans.
Thank you so much. Thank you for having me.
Moving